Hey, good morning, everyone. Happy Monday. It is Orthodox Easter um, this weekend, so I hope everyone who celebrates is having a good time out there and enjoying it. I'm going to be a little less active today because I'm going to be doing some family stuff later on, actually. So let's take a look at what we've got to start the week, right, with the S&P 500, where we can go with this. So that's the main thing that I'll be looking out for this morning to see if some of this upside pressure in these markets wants to take control before we potentially see the next move. We're starting off the week on a strong note right now. The S&P 500 has rallied pretty well over last week's highs, right? Last week on Friday, we managed to close out and make a push to the upside into the end of the week, right after a little rocky of a start, realistically. So let's talk about a few different things here. A lot of market movement last week. We saw that something that I talked about earlier as well with Warren Buffett. Warren Buffett had his annual shareholder meeting for Berkshire Hathaway, and it's very known to last week that we saw him dump a significant amount of Apple shares as Apple rallied fairly well on earnings. And he also said his expected successor, Greg Abel, he wants his expected successor, Greg Abel, to take over the stock investing decision if he were to step down. So he understands businesses extremely well, and if you understand businesses, you understand common stock. This is what Warren Buffett said in this annual shareholder meeting, right? The statement came after the conglomerate posted a 39% jump in Q1 operating profit alongside with a cash pile record of $189 billion, right? Despite its huge cut in Apple, is expected to remain Berkshire's largest holding in 2024. So as I see Apple right now, with what had transpired last week, we got a gap up on some pretty tough news, I would say, right? A lot of it was based on the buyback. And what we're seeing right now is some kind of downside pressure. I'm honestly looking to fade Apple to the downside to fill this gap. I think that realistically, it's not going to sustain that much. And if we do indeed see a lower high in these markets, that Apple won't necessarily survive that easily, and big tech is getting rotated out of right now as we stand. We also had a very big hit in Starbucks last week. Not that this is necessarily a direct market effector like we could say Apple or Microsoft or Nvidia might be as big tech giants, but huge trouble at Starbucks has prompted former Starbucks chief Howard Schultz to weigh in on the situation. I've emphasized that the company's fix needs to begin at home. U.S. operations are primary reasons for the company's fall from grace, he wrote on LinkedIn, adding that the coffee giant needs to refocus on the customer experience after the Q2 earnings significantly missed, right? Starbucks declined about 17% after and slashing guidance. So it's a very big dividend collector that's been growing dividends pretty aggressively over the last few years. That I don't honestly mind, right? I feel like at these low prices, having a smaller position in this isn't outrageous realistically. So let's take a look at some of the other stuff. We're going to be talking about space and some of those space comments recently. But the Magnificent Seven contributes about 1/5 of the earnings growth to the S&P 500, the SPY. VOO, whatever, IVV, VTI, whatever you want to call it, but the overall market. And analysts are ramping up expectations, according to Citi strategist Scott Cornett. Right, those stocks, which include Apple, Amazon, Google, or Alphabet, right, Meta, Microsoft, Nvidia, and Tesla, have seen Q1 earning estimates rise more than 29%. Nvidia still hasn't reported; it's going to report at the end of May. But what about the other 494 realistically? So full year earnings growth has become slightly less negative amid stabilization. Now a lot of these big tech names, right? Them reporting earnings so far have been have been helping this market rally a little more, right? We've seen gaps to the upside, we've seen follow throughs. Just Meta is one of the only ones here, pretty much that gap lower, trying to fill its gap higher. But we're starting to see these rotations outside of tech, which right now, okay, we take a look at the ES for example. It's doing fairly well, right? It's holding a decent bid here, but we're starting to fall at risk of potentially seeing a lower high in the coming current right points or within about 30 points in this market, as we'll take a look. We're coming into this 50-day average here. If you take a look at what that looks like on the SPY as well, realistically, we've hit that. We're trying to rebound above it slightly now off this open into that 513. That 513 area was my upside target. We could potentially see into that 515 at this point. But if they don't start selling from there, new all-time highs aren't out of reach. So speaking of space, right? After the space shuttle program was retired in 2011, NASA turned to private companies for space station deliveries, right? SpaceX began supply runs over a decade ago before launching its first astronauts in 2020 and ending NASA's reliance on Russian spacecraft. So it also beat Boeing in the race to space under NASA's Commercial Crew Program after the U.S. aerospace giant, whose resume goes back to the Apollo moon missions, ran into issues and delays during flight tests and manufacturing. So Commercial Crew was structured as a multi-tiered competition to get private sector companies to produce the most cost-effective, innovative, and safe way to get into the International Space Station, while SpaceX has already sent 9 manned missions to the ISS with its Crew Dragon capsule. Boeing Starliner is finally arriving to the launch pad, and there's a lot on the line for the company, which has incurred a $1.4 billion accounting loss for the program, as well as recent reputation problems, starting from crashes of Maxes and door plugs that blew out mid-flight, right? Boeing is one of those names that, amid all this bad news, right, it still cannot be absolutely destroyed. Granted, it's down a decent bit, but it hasn't necessarily been completely wiped off the map. So Starliner is set to blast off on Monday, today, 10:34 p.m. Eastern, with astronaut Barry Wilmore and Sunita Williams on board. So the vehicle will launch from from Cape Canaveral via the Atlas V rocket built in the by the United Launch Alliance, a joint venture between Boeing and Lockheed Martin. So it's going to take about 26 hours to reach the space station, and Starliner will return the pair to Earth in about a week after docking with ISS, landing in an American Southwest with giant parachutes. So in comparison to the iconic water splash on a SpaceX's Crew Dragon capsule. So we'll see how that continues, right? Space travel and space stocks. Remember, that was one of the big buzzes, right? Especially around SPACs have not necessarily done super well. You can see space stocks to infinity and beyond. Looks very, very awful here on the chart. It's only a line chart at that, so I don't imagine that they trade much realistically. So I haven't really been doing that much. I don't necessarily see like crazy opportunities, but it was top of this news event stuff, so I figured might as well talk about it. In terms of the S&P 500, this is what many are here for. Last week, very nice rally into the end of the week. We streamed that live, and it was a great day, honestly. Today, they're holding the bid very, very well here. We're moving above this 51.70. We're getting into the mid-70s, some heavy volumes accumulating. We're at a point where markets can potentially see a peaking, right? We can see a lower high get presented. I think as long as we can hold this low 70 and I would say maybe even low 60 today, we can try a push into 51.85 into 51.95 area. I think that might be a bit of a stretch, especially on this continued momentum to the upside here pre-market. I'm going to be very, very careful, especially on the start of the week, if we're gapping up like this after a lot of weakness at the beginning of last week. I'm not necessarily too fond of just blindly continuously buying. Last week, when we saw better prices, when we saw key distribution ledges, when we saw people getting trapped into the shorts, I was a bit a bit more calm trying to just blindly buy. But here we start to get into territory that presents the opportunity for a lower high. And what that presents is a risk for the longs, right? A lot of profit taking is coming up at this point. If you're long from about 100 points lower, right, even more, 150 points lower, maybe 120, 30 points lower, these are areas that you're going to be better off trying to take some profit. So something to realize, something to understand. As we get into these higher positions, it doesn't necessarily mean more and more and more bullish until we actually start closing above some of these key areas. So I'll leave you with that. Let's open up our live trading room. I'll see you guys in there. Check out community.tradeproacademy.com, and we'll do this again tomorrow. So thank you. Cheers. Happy Orthodox Easter to everyone that's